Bitcoin in the next year, in 2023. Where is the price headed? That's the big question. Nobody has an answer to this. I'm not pretending to be any different. But in order to add a bit more confusion to the whole thing, I asked the community, right? I asked via the YouTube chats. I also asked via the Telegram groups, right? There is the public Telegram group. There is the private premium membership group that you can join if you feel like this. So let's look at all of those thoughts. Let's have a look at if there's any kind of congruency around the predictions, if people are more or less agreeing to things, or if it's very widespread. And then afterwards, I'm also going to share what I personally think is going to impact the price, where the price might be headed, right? And then 1 year from now, we can have a look. Is anything that has been said in this video actually relevant to what actually happened? Did the price develop in the directions we were all expecting? So let's jump into this. So this was my question in the YouTube comments, and I asked, where is Bitcoin headed? I will discuss the comments. And so we've got, first of all, maybe a quick stop at 14K before, who knows? So in other words, the anticipation is we're going to go slightly lower, and then it's unknown. Currently we are at 16 to 17K. Then we've got here a comment, 8K bruv. In other words, a more than 50% drop additionally from where we already have come down, right? We already came down like 70% or so from the all-time high. And then we've got somebody that made a very contrarian comment compared to the other two. And he says, everybody keeps saying we're going to 10K. Reminds me of everyone saying at the same time the same thing about the 100K. So the 100K thing was basically everybody across YouTube and across a lot of crypto communities said, when we were at the 60 to 70K, said it's very likely, since we have already grown that much, that we are now going to hit the magical 100K mark. And this was pretty much across the board. Most people thought this is going to materialize. And we all know we peaked out at 70K and we did not go to the 100K. So when the masses are all in agreement in something, maybe the masses are wrong, right? There is a theory that the market tries to induce maximum pain. So when everybody thinks we are going in one direction, it's usually the other way around. I don't really subscribe to that theory that much. It's a whole nother topic, but usually the markets are rather self-enforcing, as in momentum continues in the direction where it was before. You can even backtest this with moving averages, etc. The time when things turn around is when all of that momentum has been basically exhausted, right? When all of the capital has already been pushed in, then at the peak of agreement, then we might be turning around. But more often than not, when we are like 60, 70, 80% in agreement of the market, actually, the price is very often continues in exactly that direction and things become a self-fulfilling prophecy. Only when the whole fuel for the up movement is completely exhausted, that's when we see the turnaround. Okay, so, but still an interesting thought, right? Everybody thinks we go into 10K, probably we don't. Who knows? We then got a very interesting counter comment, and I want to go into the chart of this. So the counter comment here was simply just by a user with a very cryptic name over here. And he said, you need to check only one indicator for that, volume profile visible range. There is volume void for Bitcoin in the 15 to 10K range. How would Bitcoin make a support in that range? If it loses 15K, when would there be, when there's no volume before 10K? Okay, so what's the chart around this? There's basically two ways to look at this. So let's look at this in terms of the volume profile. So I actually like this a little bit more, which is basically showing the same thing that he was describing here with the VPVR. So the volume profile is showing the trading volume, what we see here also at the bottom. But instead of looking at this, at the trading volume from day to day, what we see here at the bottom, it looks at it on different price levels. And the argument here that is made is that between 10 and 15K, there wasn't too much trading. So in other words, if we do lose the 15K, we're pretty much going straight down to maybe 12K, maybe even 10K, because there wasn't a lot of trading. The idea is the following. when you've got a lot of trading happening at a certain price point, that price point might act as a resistance or as a support. And why is that? Because a lot of people have this as a reference price. So let's say you buy Bitcoin at 10K, and then the price goes up and up and up, and then it turns around. And then you might be willing to do some kind of action. You might be willing to sell your Bitcoin once it reaches back to those 10K again, right? Because you don't want to go into the losses. You have seen all the gains happening. Now all the gains have been lost, but at least you don't want to be losing. And so there are very often some turnarounds happening, either people buying or people selling, when there's a lot of trading activity at a certain point. When you bought at a price and then the price drops and then the price recovers again, right? When it drops, you think like, oh, I just want my money back, right? I made a wrong decision. At least I want to have my money back. So when the price drops and then it recovers again to the same level, at this same level, you might then be selling and say, okay, I'm out of this. This is not for me. And so then you have a resistance at this level. So you always need to look at these kind of volume patterns, or at least that's the idea of this whole strategy. And so in other words, when there is not a lot of trading happening at a certain price point, this would then indicate that it's unlikely that we will see a price turnaround, because nobody has this as a reference point and would be willing to buy back in again, or would basically help the reversal. Wherever there is a lot of trading volume, these are normally places where there's reversals of the current momentum, where there's supports and resistances. That's the idea. How strong is this concept in general? How well does this work? It depends, right? It depends on your time frame. It depends on the average holding duration, and it depends on how much psychology is impacting the price of an asset. I'd argue that this works best for altcoins that are relatively actively traded on shorter time periods. Because in altcoins, you do have a lot of flippening happening and the reference prices matter a bit more. For longer time horizons, when you now compare prices to, say, 2019, a lot of people might not even have this as a reference price anymore, right? Because the holding period of Bitcoin might be smaller on average than, say, 4 years. On average, maybe people trade Bitcoin and hold it only for a few months. And so you have to be careful of what kind of time frame you actually take for this indicator, where reference prices are still relevant. And for shorter time frames and for active trading, for assets that are actively traded, I think it makes more sense to look at this. So it's an interesting argument, but I take this definitely. I definitely use this rather for other assets, not necessarily for Bitcoin. That's also very heavily macro driven, right? Not just TA driven. Now I do want to look at two interesting chats. So first of all, the public Telegram group. Let me actually, do I have this link here? No. So if you want to join this Telegram group, simply just look for the Bitcoin Strategy channel in Telegram, or otherwise there's also a link in the video description. You can join over there. But here are some ideas. So first half of the year, probably more of the same. Hopefully second half will be better, right? Same thing that has been discussed before. Then we see first half, we see the bottom, second half sideways, and just 2024 we start going up. So still same pattern, right? It's kind of like bearish and then a slow recovery here for semi, in this particular case, a bit further in the future. And then for Carlo, we've got prolonged sideways price action for BTC and ETH, because ETH and BTC are pretty highly correlated, while other alts see more red. Whole market starting to move up slowly in Q4. Same theme again, getting more and more green in 2024. So an agreement here. I do agree with the idea that the alts are likely going to see more red, the altcoins. And that's because when there is not a lot of bullishness, there is in general more sell pressure on altcoins, because altcoins tend to be more inflationary, right? Altcoins are held by insiders mainly. They are held by early backers, by VCs, by the team. And so you've got the token inflation, the new printing going on, and this inflation usually is way, way higher for the altcoins than it is for Bitcoin and Ethereum. And so when there's not a lot of excitement around something, right, when a new feature is being shipped and it does not really attract new investors because we are in a bear market, then all of this development can't really offset the token inflation, meaning when we are just neutral or in a bear market, the altcoins tend to bleed more. And I do tend to agree with the idea that in case we do sidewards price action in Q1, Q2, total 3 as a measure of the altcoin market cap is likely going to go lower and is likely going to underperform, as we have already seen in the last months, by the way. And then another comment here by Sander, hope so too. So that's about the recovery in the second half. But what do you guys, what do you think will be the narratives from that time for the recovery, right? Will it be gaming? Will it be AI? Will it be something else? Very, very hard to say. AI could be something, right? There is now a lot of hype around AI. ChatGPT is now in all discussion, and it's a very good tool. Crypto gaming, who knows, right? Crypto gaming has the issue of having a lot of Ponzi-nomics, and people might be getting behind, might understand this now more and more as well, with all of these running games and with like Step-In or Axie Infinity, etc. We've seen quite a lot of crashes, and that's because, you know, there's only so much money going around, and if you play to earn and you don't play because you simply just enjoy it, then you've got a problem. On the other hand, if we do see major gaming companies getting into crypto and maybe selling NFTs, this could boost up the whole crypto space. But I'm not really sure that this will happen in a bear market. That would be too much reputational risk for a major game developer like Blizzard or so. Probably not going to happen in that kind of environment. It's rather going to be an accelerator if we have already bottomed out. That is at least my thought on crypto gaming. Now, let's look at this. And after we went through this comment, we are going to look at the models that I currently look at and what I currently see is likely going to happen. So, we have here the following. I think the really large institutions / funds like Fidelity and BlackRock somewhat missed out on the last bull run, which I very much agree with. Very much true. They came in way too late, and a lot of them have already off-boarded again. But some stick with it. Fidelity is one of them for sure. But Fidelity and BlackRock still seem to be active, as can be seen in the Bitcoin related products they have and are preparing. Very true. They have massive FUM, so funds under management, and can easily push Bitcoin up. It just seems everyone is still hanging back and waiting for the right moment to jump back in. I reckon one big catalyst is all it takes, and everybody deploys stables and foremost back in. Crypto seems dead, but I believe lots are still quietly watching. Retail is still somewhat around, in my opinion. And especially for this last point, retail is still somewhat around. I have a very nice chart that I want to share with you guys, so stay up for this. I pretty much agree with all of this. It is very, very interesting how there's still preparations happening from Fidelity, BlackRock, and the large institutionals. And of course, we did see collapses with FTX, etc. But we also see still continued support by some players, and especially once prices recover again, simply due to correlations, because tech stocks are going up, we are definitely going to see more demand from these institutions, or at least from retail through the institutions again. And so here's a thought experiment. If 50% of stables were to get deployed back into the risk assets, and considering the BTC current dominance is currently at 42%, we could potentially theorize that using just USDC plus Tether plus DAI, the current market cap of 116 billion, that 25 billion would then flow into BTC. Makes sense. Question is, how would 25 billion inflow into BTC impact its current price? So yes, the current stablecoin dominance, this is what we discuss quite often in the premium channel. The current stablecoin dominance, as in measured the dominances of these three combined, is very close to an all-time high. So a lot of money is still in stablecoins, meaning that even though we see all this bear market going around, even though people are very bearish now, we can also see that they're not that bearish to completely move into fiat. Right? So the idea would be, if you completely give up on crypto, you would completely convert all your Bitcoin or your USDC, etc., to fiat because you don't trust all of this, and maybe your stablecoin is the next to collapse, right? But what we actually see is people are simply just speculating on the prices falling, and they keep their money in stables in order to then potentially turn this back into risk-on assets again. So this is what we see as in the dominance charts. It's not that prices go down and the stablecoin dominances go down as well, as in everybody just flees into fiat. Instead, we see the stablecoin dominances at all-time highs, meaning if that money flows in, we would see another rally. How much would 25 billion inflow into Bitcoin impact the price? Hard to say, but what is clear is that there is some kind of leverage effect, right? So when you deploy, say, $1,000 into an altcoin, the altcoin market cap goes up by way more than 1,000. And that's because there's only so many coins that are in a liquidity pool, right? And other coins might be locked up somewhere, they might be in wallets. And so when you buy $1,000 worth of altcoins, the altcoin market cap might go up by 5,000. Okay, so it depends on the liquidity of the particular altcoin, but it's true. Once we see this revert again and 25 billion flow into crypto again, the crypto market cap itself will increase by way more than 25 billion simply due to the leverage effect. So yeah. Now, where are we currently headed, in my opinion? What is interesting is that some particular models have completely broken. Right? So for example, the 200-week moving average, that's the one we were talking about in prior videos. It used to be a pretty good floor in the past, now not anymore. We are now significantly below that moving average. The moving average is at 16.6K. No, the moving average should be higher. We are noting at 16.6. The moving average is at 24.4K, okay? So we would need another 50% increase from the current price to just go back to that moving average, which used to be historically a very good floor, right? This is a long-term chart starting in 2012 all the way to today. So something has changed around the dynamics in the Bitcoin price movement. We can also see this in different logarithmic regressions. So for example, this one over here, this used to encompass the price pretty well, right? The tops and the bottoms were pretty well encapsulated by this trend channel, and now we have consistently broken out of this trend channel. The lower bound of the trend channel, let's zoom in over here, is currently at 57K. Okay, so that's the minimum of this trend channel. The top here is at 232K. So very far away from this. Some patterns that pretty much described the Bitcoin price relatively well have broken, and so the question is, will Bitcoin ever recover again? Is hope completely lost because all this upwards growth trajectory has slowed down due to the macroeconomic environment? Now, we can draw these lines a little bit differently, right? Once we don't use logarithmic regression, or we regress it a little bit differently, right? We just try to connect these different lows. We are now pretty low here, and this particular just curved line hasn't yet been broken. This is not a random curved line. I actually drew this, I think, roughly a year ago. If you look at older videos on this channel, I think the video that's being played once you go to the channel page, it shows exactly this graph as well. And this is when I said we might be pretty high and we might be going down to like 20 or 15K or so. This in the end really materialized. This chart would indicate we have directly seen the bottom and we could totally turn around here. Who knows, right? These things can break, and similar models have broken in the past. Just as a reference point, not every model yet has broken. The problem is always for crypto and for Bitcoin, the problem is always the potential black swans or the potential negative impacts that could still play out in the next year in 2023. Grayscale has its 50% discount to the net asset value because of its commingling of funds with Genesis, and Genesis went bankrupt. Binance has a lot of withdrawals. Who knows if they can survive or not. If they cannot, then we definitely will see another leg down, right? This was the leg down from FTX. Now we see a recovery. This, by the way, is not just the regular Bitcoin price. This is Bitcoin relative to the Nasdaq, right? So Bitcoin divided by the Nasdaq 100. In order to simply just see outperformance, right? How is, if we take away all the macroeconomic stuff, how is Bitcoin relatively performing? And so after the FTX collapse, we are recovering, but this will definitely go down again once we see any of these major implosions happening. Grayscale and Binance are two of those potentials. Another one is property valuations, right? Property valuations are now coming down, but they're not coming down very fast. There's still a lot of holding of properties in the market. There's not a lot of trading of properties happening. People are just keeping their property even though interest rates are going up, but affordability of properties is going down because it's now way more expensive to buy property due to financing being more expensive. And then you've got, of course, inflation, right? The inflation rates are still very far away from the target 2%, meaning it's likely we're going to see further tightening, further monetary tightening, further increase of interest rates. And the higher interest rates are, the more you have to discount cash flows in the future, and the more tech stocks, because of that, are going down in valuation. And in correlation, crypto also goes down. So high inflation is bad for crypto, and inflation is not very far still away from those 2%, meaning we might still see further increases of the interest rates pushing down prices. So this is all the macroeconomic risks that we have. This is the bear side of things. And these things have not yet been priced in. I don't think a Binance collapse has been priced in. I don't think the property crash has yet been accounted for. And I don't think people have already completely anticipated how long we might be at these elevated inflation levels, simply because also trading across countries is getting harder and harder, right? There's some kind of deglobalization happening, and there's more and more tensions between China and the West, which also pushes up prices, obviously, right? We gained quite a bit of price stability due to cheap manufacturing in China. Now, where's the positive side here? The positive side is that historically we are now quite cheap on Bitcoin, and this reduces the sell pressure, and this is probably also the reason why Bitcoin recently can outperform the Nasdaq somewhat. Bitcoin has already come down a lot, and people are simply just waiting for the price to recover, and they're not selling at all. They're rather going to buy more the lower it goes. Right? You don't want to be the sucker that buys at 70K and then sells at 15K. You rather, if you bought already so high, continue to double down on the lower prices if you believe that Bitcoin is still going to be around in 5 to 10 years. And that's the thesis basically for most Bitcoin investors, right? The conviction in the asset is pretty strong. And so what we can look at here in the blue line is the realized price, right? So we have here the market value to realized value Z-score, which just puts this also in perspective to the volatility, to the risk, the daily price movements of Bitcoin. That's then the orange line. But let's just look at the green line, the realized price. It basically looks at what was the price of Bitcoin on average in the entire market when it last changed hands, when it last moved from one wallet to the next. And so by this, we can basically see, is the market in aggregate currently at a loss or at a gain? And so we have these few times in the market before, right? For example, here in 2015 after the Mt. Gox crash, or here in 2018, the final miner capitulation after this ICO boom. We have these few times in the market, near the Corona crash, where the market as a whole, the entirety of the market as a whole was in losses because the price was below this blue line, below the realized price. And that's then when the market as a whole has way less sell pressure. If you are in losses and you believe that Bitcoin will stay around in the long term because its inflation is lower than fiat inflation, and you think over a very long time it's going to appreciate, if you don't need the money right now, you simply just keep it locked up in Bitcoin and wait for the next bull run. And when the market as a whole is in the red, then it's very likely selling pressure goes down, dollar cost averaging takes over and can potentially create a floor price. And this is currently where we are. Okay, we are still now since when is this? Since June of this year, we are below the realized price. The market as a whole is in red. So people are not really selling that much. The realized price is now slowly declining, but it's declining way, way slower than the actual price, right? So in other words, it seems like people are holding on to their Bitcoin, even though the global macroeconomic picture doesn't look so great. Only stocks are really going down a lot. Bitcoin keeps up comparatively well, given its high risk, right? Its high volatility. If things are going down, right? When tech stocks are going down by 10%, in theory, one would assume that Bitcoin and crypto in general goes down by more than 10% because it's more risky, it's more volatile. But even though we do now see tech stocks going down, Bitcoin goes down less. That's a very positive sign, in my opinion. Another very interesting thought is here, where we had this talk about retail is still somewhat around. And I can completely confirm this by looking at the addresses, at the number of wallets that hold at least one Bitcoin. Okay, you can also look at this in other dimensions. You can look at the wallets that hold at least 10 Bitcoin. That's now pretty large wallets, right? That's 160K. Not everybody has 160K in Bitcoin. But 16K is a pretty much reasonable retail size. And we see how this is actually growing very, very fast. In other words, Bitcoin is held more and more by the masses. It's held more and more by retail. And a lot of people say retail is pretty bad in trading, right? But I don't really agree. Retail was pretty good at anticipating the Tesla boom. Retail was pretty good at also making money with all the short squeezes. And retail was also the first who bought Bitcoin and crypto and made very nice returns. It was not the institutions. And what we see is that even though the current price of Bitcoin is lower than the peak of 2017 with the 20K, right now we are at 16 to 17K, even though the price is now slightly lower, the number of wallets that hold at least one Bitcoin went up a lot. It went up from 700K wallets, roughly, to currently 977K wallets. So the price is lower, but the number of retail investors went up. So how does this match? It's simply because the whales, basically, they sold over time, which I think is a good thing. You want the Bitcoin to leave the big whale wallets, you want the risk of the entire ecosystem to go down, and you want Bitcoin to be spread more and more across many, many different wallets. And that's what we are seeing. We do not see retail capitulating. We rather see the opposite. With those crashes, more and more retail people are buying in. We see this especially in these down movements, right? Once we are rallying, this is not necessarily the case, but retail is smart. Retail is accumulating when the price is going down. And so I expect this to continue. I expect retail actually to be the backbone of this floor formation and potentially also the start of the next rally. It's probably retail, maybe also through 401ks, etc., so that they maybe then deploy money into Bitcoin via Fidelity and via BlackRock, but not directly because you can't buy Bitcoin directly in a 401k. But maybe through those institutions, they might put things into a retirement account because still Bitcoin over the very, very long term is likely going to appreciate if it stays around, right? If it doesn't get completely outlawed and if it doesn't break in any technical way. It's likely going to be around and it's likely going to appreciate in value because of its inflation. It's way lower than fiat inflation, right? And so we see less of a growth for the addresses with at least 10 Bitcoin, which makes sense, right? You want retail to pick up all the slack. And then another very interesting metric that I also shared in a prior video is the percentage of Bitcoin that's been held in wallets for at least 1 year. So you're looking at now what's the share basically of the long-term investors versus the short-term speculators. And the more long-term investors you have in the market, the healthier a market is, because then you've got a relative large fraction of Bitcoin being illiquid. When a lot of Bitcoin is held by long-term investors, it's illiquid, meaning when new money enters the space, when people buy Bitcoin, it can turn around faster. And so you see this exact opposite, right? When you've got a lot of money here, for example, in short-term trader hands, right? So here on the left, we have the y-axis with how much of Bitcoin's wallets have held Bitcoin for at least 1 year. When this is going down, right? So in this case, 60% of Bitcoin has changed hands in the last year. Then a lot of speculative money is in the market. The market is very heated and all the speculative money is very nervous. We see a little bit of a price blip. Then these highly speculative traders are exiting, and then we see the market price collapsing. And the same is true the other way around. When a lot of money is in long-term holders' wallets, the supply becomes illiquid, and with that high percentage hold in long-term holder wallets, the price can then appreciate until those long-term holders are selling off to the short-term speculative money. Right? And so currently we are pretty much at an all-time high again for this. Right? We are at 66.8% of Bitcoin being held in long-term holder wallets. So supply is relatively scarce, meaning if at some point in time we see a catalyst for the macro environment to turn around again, then the price appreciation in Bitcoin is likely going to be very, very strong, because not a lot of Bitcoin is floating around. A lot of Bitcoin is simply just being held. And that's the kind of situation that we want to be in. We want to have a high stablecoin dominance. We want to have a lot of illiquid Bitcoin, and we want to have a relatively low price coupled with a lot of money being held by retail that simply doesn't give up, that simply just continue to DCA in. That's a very, very nice recipe for a new bull run. Now, still, we have all of these risks here, right? So, of course, the price can short-term still decline. And how long this stays, right? How long these risks stay in the market is very hard to say, right? It very much depends on when does inflation get under control, when do properties stop to get sold off. But once these things clear out, then it's very likely, in my opinion, that we will see the next bull run. Because it's very hard to time this, because it's very hard to say how long this still has an impact on the price, my simple approach to this is I simply continue to buy in. I simply dollar cost average in. I see the current price being relatively cheap. But I also say there is still a lot of risk in the market that might put it even lower. But I think over the long term, 3, 4, 5 years from now, it's very, very unlikely that Bitcoin will still be at these levels. And that's the whole idea of investing, right? The idea of investing is you want to buy assets that you long-term believe in, and you want to buy them for a cheap price. Investing is not you buy something cheap and you sell it shortly afterwards for a higher price. That's speculation. Can still work, but that's definitely not the situation, not a good situation for Bitcoin right now. If you buy right now and you want to be selling in a month or two, it's unlikely that you're going to make money. Or at least I wouldn't necessarily use Bitcoin for that, right? I would use something that's more volatile for this. But if you have a long enough of a time horizon and you simply just look at these dynamics, at the demand and supply dynamics, the supply is definitely constrained. The demand is definitely strong because retail continues to buy and the price isn't too high. So simply just expand your time horizon. That's, I think, the best and the safest way to play all of this. Expand your time horizon, buy regularly, don't look too much at the price. And then no matter what happens in the next year, if we directly recover from here, or if we do see some of those risks majorly materializing, it doesn't really matter too much, because I think it's likely at some point in time that this recovery will happen because the belief is simply strong enough. The long-term holders are not selling, retail continues to accumulate, and it has never been so many people that have been in Bitcoin compared to now. And even though the interest now in crypto is low, the people that adopted Bitcoin are not exiting. They simply just stay strong and have their diamond hands. And I'm one of all of those retail people. Hope you enjoyed this video. Thanks for watching. Feel free to join the Telegram groups, of course. Wish you a happy new year as well. See you in the next year. Bye-bye.